Well, another day, another hit to Wells Fargo's image. The latest, employees from Wells Fargo's unit that deals with business, not consumer. That's where all the other problems were. Business banking apparently altered information related to corporate customers, everything from Social Security numbers to other identifiers. This after multiple scandals and sanctions and penalties for all kinds of other issues. So we thought, what is going on with this company and with the stock? Should it be in your portfolio? Ed Groshans, Hite Capital Markets senior banking analyst, is here. And you watch. The reason we like you here is because you watch from specifically a regulatory standpoint. I would think this is toxic for them. But you say what?
I'm positive on Wells Fargo, but not because they're doing a great job, but because their assets are capped with the agreement with the Federal Reserve. So all the equity, all the earnings that they have, they're going to have to return it in some way, shape, or form.
What do you mean capped? I thought that was a bad thing. The Fed capped Wells Fargo's ability to grow due to inadequate risk controls. That was an unprecedented smackdown of a U.S. bank by the Federal Reserve.
And I think well-deserved. And today's events show that.
But, well, today's events show that the stock is down another 1 2/3%.
Yes.
I mean, this is like death by 1,000
It is, but
violations.
They're still going to earn $23 billion a year, and they can't grow. So what do they do with those earnings?
Let's talk about what they did this time around.
Okay.
Employees, and by the way, Wells Fargo reported this. They discovered it. They reported it. They altered information on business documents as part of an anti-money laundering deadline that they were supposed to reach of some sort?
Yes.
Is that in and of itself the worst thing in the world? Did they put fake information like they did with more than 3 million consumer accounts 2 years ago?
So that's unclear, but it doesn't appear to be fake information. It appears that they were using other sources of information as opposed to going to the client and getting the information and then adding it to, I guess they call it altering, but they were adding it to the documents they had in order to meet a deadline. So this is a little different. They weren't creating information, right? Or like they were creating accounts.
Right.
This information they had, it may have been stale, may have been dated, there may have been blanks on some of the forms they needed to fill in. They got it as opposed to going to the client. They went to older documents and other people and sourced the information. And that's the error on their behalf.
We had a Wells Fargo shareholder who is also an activist. He was kicked out of the shareholder meeting last year for pressing the board on what they were going to do to prevent these kinds of scandals. He was literally dragged out of that meeting. He told us that the Wells Fargo brand, that Stagecoach brand, is being burnt to the ground constantly by these issues. The annual high of this stock was $66.31. You can see it right now. It's $54.08. That's not the biggest drop, and it's certainly not at the 52-week low. But if I'm an investor, do I really want to put this in my portfolio right now, or do I wait till all of these issues shake out?
That's a great question. We don't know how many issues there are, and there seems to be some weekly or maybe monthly. At the end of the day, what we had is a wholesale change in the management team. And so now we have Tim Sloan running the shop.
Is that a good person? Because
he is. He's a good operator. So I think
it doesn't look like it to some people.
Of course it doesn't. But these are legacy issues that keep coming through. All right. And so what they've already implemented is a broad risk and compliance system that's going into place. So these issues happened late last year, early this year, found out they're in the news already. How long we were doing the account opening scandal before that came through. So what it shows is that the compliance programs that are going in are picking these things up quicker, and therefore they can rectify it faster. Now, Tim says they can get out of this agreement with the Fed by 2019. I think that's a bit early. 2020, maybe 2021.
All right, folks, if you decide if you want to take the risk or wait till 2021. Ed, good to see you. Thank you very much.
Thank you, Liz.
Ed Groshans.